This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to Avoiding the Crowd podcast with your host, Maj Soueidan. I'm your producer, Robert Kraft from the SNN Podcast Network. Maj, what's going on, man? How you doing?
I'm great, man. I'm just a little tired, so I had to just interview the company for our UF. We did a live webcast of a company, actually a Canadian company. We're trying to look more at Canadian companies for our members, so that was fun. So
nice.
An hour and a half interview.
Yeah, no, you had to decompress a little bit before we recorded today. So I
would have been upset.
What does a decompression consist of? Is it just splashing water in your face, or are you just staring at a wall for like 10 minutes and then
I just off my bed until maybe he's not going to call me back. Maybe he threw his back out like you did.
I think it's my chair, dude. I don't know what the hell's going on. But so you're waiting for the text. That's what it was. You're like, oh, don't text me.
Yeah.
Don't text me.
I was getting ready. But yeah, man. No, it was a good day. I was pretty busy actually. Actually, we interviewed them. Symbol is acquisitive. QUISF is a symbol, I think, on that.
Right, and then I think it's QUIS on the venture. Yeah.
Yeah, and QUISF on the OTC. They're a integrator, a Microsoft integrator. It was a pretty interesting story. So we wanted to I interviewed the CEO maybe about 3 years ago. I wanted to see how have been doing since then. And of course I didn't buy it, and it's gone up like 4 times since I didn't. But
do you own any now?
No, I don't, but definitely taking a look at it.
Gotcha. Well, I think this is an interesting segue into the mindset and the strategy of you. How sometimes you work fast, sometimes you take a while to look at some names. But what we thought would be a fun idea today is that Maj actually did a keynote presentation at one of our conferences, Planet MicroCap Showcase, in April 2019, and the theme of that panel was called "What Do I Own?" And we figured we'd do a follow-up on that, because he talked about 4 stocks that he owns, or at the time he owned. We're going to get an update now to see if he still owns it. And the 4 stocks were, at the time it was ReproMed, but they've changed the name and symbol, and it's now KRMD, ATGN at ATGN, RWWI, and DHX. Just to give, I'm going to show off for Maj a little bit, on 3 out of 4 of these names. Since he talked about it, he did the presentation on April 30th, 2019. As of today of our recording, which today is September 21st, 2020, KRMD is up 338%, ATGN is up 98%, RWWI is up 132%. Yeah, DHX, it's down 20%, but 3 out of the 4 say did pretty well in about a year and a half. So, we want to do an update, and full disclosure, any of the stocks that I just mentioned, neither I nor SNN.Network do own shares in. So I'm giving you an update there. And so Maj, let's go through it. What was it at the time that interested you in wanting to own these stocks? And then, yeah, I've said update like 5 times in the last minute, so I'm going to say it again. Update on whether you still currently have positions in these stocks and why.
Yeah, so of those 3, I had sold DHX since then, and I thought it was just an interesting topic because Connor Haley just actually published a really cool report on I guess some of the best multi-baggers, or I guess the multi-baggers over the last 5 years, and tried to. I think it was 700-page report that him and his interns did and I found that very interesting, and I think it was a really great idea because he kind of looked at them all and tried to find where some of the multi-baggers were from, geographies. It's interesting to see a lot of multi-baggers, or even more, I think, were outside the U.S. And then he goes on to talk about some of the catalysts that propelled these stocks to multi-bagger status, and if they can continue based on what he saw there potentially. So I thought, it would be interesting to kind of play on that topic a little bit. And as I'm looking through Juno Investing's holdings, I'm trying to see if I can do that a little bit myself. And, so I thought it'd be cool to look at these 4 stocks and say, okay, what were the traits that I kind of maybe thought that would lead to, higher returns and maybe, multi-baggers over time. And so we can just do that for a little bit, and then so it should be a relatively short one for us. Okay, I like to focus on the 1 or 2 things. I think during your presentation I called a big hairy ass fact. I'm not very was it is it something like that? Was that what it was?
It was the hairy audacious fact.
Yeah, hairy audacious, something like that. Yeah, so that guy's from the Good to Great book or something like that, where he's I guess they call it the big hairy ass goal in the Good to Great book. So I was like, what's that one, or can I find one thing really? I mean, at first I was like, can I find maybe 5 things that I like the company, really like the company? But I tried to narrow it down to what's the one thing I liked about it that could really get me excited about that. So we'll talk about that a little bit. So if we talk, and the cool thing about the first one is RWWI, which I think was the first stock I pitched during that session. And it's a great case study on why nanocaps or why microcaps, because there's a lot of negative stereotypes there, that they're all shitty companies, fraudulent companies, pump and dumps, and they're really not. There's this, level of tier 1 companies out there that are really hot and worth, taking a look at. And RWWI is a great kind of case in point for that, actually. So if you look at that company, back in 2003, the company had, I think it was 22 million in revenue. This company is a software company, a reseller basically of architectural engineering software, where Autodesk is, I think, they're the biggest reseller, one of the top resellers for Autodesk. So the company, 22 million revenue in 2003. When I presented at the club at your conference, they were running at $100 million revenue run rate, and actually now they're, I think, maybe a $400 million run rate, or getting close to that. So it tells you that the market cap of a company does not always define the size of a company in terms of its revenue and stuff like that. So this is a very high quality company. They've been around for a long time, and it's just I loved it because it was a great kind of debunking of the whole microcaps are all a bunch of frauds and shitty companies. And that's part of the reason I invested in it too. But the stock has gone from, if you look at the chart, the stock was, as I'm looking back here, I think maybe 30, 40 cents, maybe back in, I don't want to say 2010-ish maybe. And then, it's right now, it's as high as, I think it's right now, it's about $14 in a straight line up. And you had a really great management team in this company that had a lot of deep experience in the software business and just making acquisitions that were accretive. But the one thing I really liked about the company was that I got excited about this thing was the margin profile, where it was going. So there was a lot of consolidation in the space, a lot of competition in the space. So these retailers are all competing. There was a dynamic going on where it was getting cut through. And there was this time where RWWI, a lot of companies out there acquiring companies to try and gain scale. And during that time, there was, some erosion in the margins, and or at least, especially on maybe a little bit on the gross margin, but there were a lot more spending on the operating side too to compete and gain market share. But I kind of surmised that through looking at some of the trends that they had reached a point where their operating expenses were going to flatten out a little bit, and they got into a certain scale where, as revenues increased, that they're going to see a really big increase in net income, disproportionate increases in the income compared to revenue increases. So I love those kind of stories where you have this operating leverage where if revenues increase 20%, maybe net income is going to go up 100 or 200%. And from my experience, a lot of multi-baggers are born from, if you can find that inflection point, you can kind of really ride a nice wave. And that's kind of where they were out there. And you saw after several, maybe quarters, a few years of having good revenue growth, but net income really not getting a lot of, momentum, even though they're making money, they finally started seeing a huge increase in their earnings per share growth relative to their revenue growth and consistent. So that was pretty interesting. So that was the one, really defining kind of stat I liked on this company. That was kind of surrounding all of its quality there. So that was why the one trade, I look at that trade all the time when I'm looking for multi-baggers. What's that margin profile look like? What inning is a company in terms of its margin expansion cycle? Not only gross margins, but in terms of getting some operating leverage by having their operating expenses a little flat as revenues move up. So that's what we got there in that one. I'm not going to, KRMD, I talked about a lot. All the symbol was REPR. And at that point, that was a classic moat with those guys. I mean, they just had KRMD as a home healthcare company, home infusion therapy kind of product that they've been selling for years. And they got a lift years ago. I think maybe 2007-8 when I first bought the stock. I just got lucky when I bought it then that the Medicare coverage kind of improved in their favor for what they were doing. So that was a little bit of an inflection point, and that was just getting stronger and stronger. But they just had an incredible moat. And theirs was simple. There wasn't really a lot of competition there for them, and they had a first-class product, which is really, really important to me in this case, and especially the medical device. If you can find these first-class products in the medical device industry that have limited competition, you can see a lot of multi-baggers, arise from that. And that's what kind of happened there. And if you looked at the history of the company, even though when it was selling at 10 or 15 cents when I first bought it several years ago, you can see that the company was this recurring revenue machine. They're growing revenue quarter after quarter on a sequential basis, year-over-year basis. And that's kind of one big thing that I liked about this company. They just proved they could do it for years. It's 13 years now. And that's kind of a result of the kind of moat type of dominance they had in their market. And then we move over to ATGN, ATGN, which is a company I own since 2000, maybe 14 or early 15, is a unified communications and service provider, a UCaaS, helping companies take their communication platforms and systems to the cloud. And ATGN has a very common multi-bagger trait that I love, and I talk all about time, is the wallet share. So basically, ATGN was taking its legacy customers through a new CEO came in and said, "Look, we're serving our customers through these on-premise platforms. We're selling a lot of hardware, communications solutions, and we're selling these software solutions that are on-premise, not in the cloud." And the new CEO said, "Hey, Jeremiah Fleming, we need to de-emphasize our hardware, maybe even get out of the hardware business and start really pushing the cloud." So they had this really rich customer base where they could say, "All right, we're going to convert you to the cloud." And it really played off. So they had this wonderful legacy customer base they could play off of and just sell this new, better product to them. And I see when I see companies that can get a lot of growth through their own customer base, I can call that wallet share, increasing wallet share. I love that. And further with that, they have some good partnerships with Microsoft and Fiserv, which are helping them, sell their products. And those kind of partner relationships for a small company in a very competitive market are very important, which enables them to have really high gross margins. So that was really the one thing I liked about it, this kind of relationships that were able them to spend less money on marketing and go attack a market they already had to some degree, but in a different way. And they're still probably in the middle of that inning of converting legacy customers to the cloud, and they're continuing to do that. Now with COVID-19, that's being accelerated already in an industry that was growing quickly, where you only had 70% of small business enterprises adopting these on-premise UCaaS solutions. Cloud-based UCaaS solutions. So there was already a good runway for growth, and we're just starting to pick up, and COVID-19 kind of accelerated that trend. So that's one interesting thing. So there you go, the legacy customers wallet share, the key thing there. And then with DHX, which didn't work out for me so hot, was a company, or is a company that it's like a software platform, a recruiting software platform to just help companies find people to work for them. And what attracted me there was the new CEO came into place there, and what I thought was going to be the multi-bagger kind of impetus was the company was profitable, so they already had a profitable business, decent, but they weren't really growing profitability because they weren't growing revenue. And so I figured, okay, this company can find a way to grow revenue. That's really profitable will come along. And what attracted me there and in that kind of sphere was they had a suite of software products, and over time the company, prior management had got out of focus in terms of the product solutions they were offering. Too many platforms, lost some focus, and the new CEO wanted to kind of bring it more into focus. And he really wanted to basically take 2 or 3 platforms you had there already and keep them, get rid of what wasn't working, some divesting assets. So that's really a big part of like some multi-baggers, is getting rid of the shit, not performing assets, and focusing on the best parts of your business when you already have some dominance, which they did. But and they were basically going to try and take these remaining platforms and kind of emulate their most successful platform and find success there. And it hasn't been that long, so I haven't given much time, but I just didn't feel that the positive pace of progression that I expected was happening. I didn't see management hitting on some of their goals, so I kind of took a step back. And then you had COVID happen, and it's not an industry I want to really be in right now in terms of recruiting and stuff. So, but I might come back to it again. So there were, so the themes again to summarize were, one multi-bagger kind of trait was this really great improving margin profile, hitting an inflection point. That was RWWI, KRMD, basically the usual moat, first-class product that's hard to penetrate by its competitors, with a great recurring revenue type of model. Number 3 was ATGN, where you had this wonderful legacy customer base that you could sell a new, higher margin, higher growth product into, and not so much have to worry about new customers necessarily to get some of your growth, which they are doing, by the way. And then DHX was hopefully a legacy company with a great with a customer base already intact, where they could take a working product already that was really really successful and kind of build the whole software platform around that. So finding a hidden gem in the company, and trying and conform the rest of the platform to that. So that's that, Bobby. So that was a quick kind of assessment of how that thought process was there.
Yeah,
I like to do that with a lot of stocks I'm buying. I try to find. And I didn't always do that. I mean, it wasn't. We do this one thing at Geo. We call it reasons for tracking. It's a really quick way of getting research to our members. We have different ways of getting research to our members. Sometimes they're longer articles. We have emails every day. We're going out weekly emails. We have this one product we call reasons for tracking, which is like a shorter version, kind of, hey, here's a quick reason why I like a company, kind of Peer Lynch style, to get things out quickly. And they generally be between 5 and 10 reasons. Sometimes I would make them. But now I think, let me take it back. Let me think about one reason. It really makes you think really hard. at a company, really trying to lay it all out and finding what is that one thing that this company is born to succeed. And I do that with every company now that I want to hold in my core portfolio for the long term. Is I'm going to try and figure that out. Of course, you're going to find other good reasons around it, hopefully too. But it just makes you really critically think about it.
Yeah. No. While you were doing that, I was looking at some of the what they're trading for currently, and I went through all the stats and stuff. But what's interesting to me, and this is one of the things I really love about our community in the small micro nano cap space, is that a good amount of investors, they don't care about liquidity. I mean, eventually, of course, they want to be able to get in and out of these names at some point. But at the end of the day, you're looking at just the business, and you'll figure out the rest later. Like at RWWI, I mean, it has an average, I think it trades like 5,800 shares. I think I was just looking at it today. I mean, what about illiquidity? What about illiquidity doesn't scare you?
No, and there were times when I was first buying it, there was liquidity. Especially a lot of times before these stocks take off, you might find some or they're starting to take off, and some of these dead stocks for a while. There'll be liquidity because you have some legacy investors that want to sell the stock.
Right.
So you'll run into that a lot of times. But I don't really care about. I mean, the more liquid for me, the better. I mean, it's just there's only one time you need liquidity is when you're wrong. So my answer is like, all right, just be right. And most of us aren't managing billions of dollars, right? We can, we can buy these illiquid companies and put our money to work in it. Just don't be wrong. And when you're wrong, I don't care if you're a nano cap or a big cap, liquidity can, stocks can become very illiquid. So for example, I remember LinkedIn. I always go back to LinkedIn, and this is before they got acquired a few years ago. And the company reported earnings before the market opened. It's a big cap company, tons of liquidity. Well, it opened down 50%, the first print, because they missed the guidance or whatever. So there's your fucking liquidity. And I think that you should use that to your advantage. I mean, if you're right, you want these stocks to be illiquid because these things can just really move forward very quickly. And then liquidity is created for you when the momentum crowd comes in when it already flies the stock. And another great liquidity kind of answer is, buy these companies. A lot of them get acquired. A lot of times I'm just buying companies, and my liquidity event is going to be hopefully they get acquired, several years from now. And I don't got to worry about it. But
it's one way of skinning the cat, right?
Yeah, and use it to your advantage. I mean, illiquid companies can have some volatility, especially when markets are crashing. You got fear in the market. Use that to your advantage and buy these stocks where liquidity is being created sometimes when they're falling.
Absolutely. And real quick, Maj, do you still have you said you sold out of DHX, but do you still have positions in KRMD, ATGN, and RWWI?
Yes.
All right, good. All right. Well, I think that was a pretty good episode. Short and sweet. We got to the point. I think we got some good stuff in there. I mean, any final takes going into the rest of the week? We got the leadership summit coming up on Thursday, Friday, so that should be fun.
Yeah, I think Altigen's going to be there.
Yeah.
At that thing, and is
KRMD? No,
I don't think so. I think IEC is going to be there.
Yep.
Which I'm long. I think I had profiled that here a few podcasts ago. Oh, by the way, you were supposed to tell me if I was talking too fast. You didn't do it again.
Oh, I didn't. Oh, I didn't tell you were talking too fast this time.
Yeah.
Well, you must. I guess you didn't talk that fast this time. I don't know. We're gonna have to ask everybody else too. Wait, hold on. Is there a feature where you can listen to these things at like minus, like at I know you can listen at fast forward speed, but I wonder if there's like a slow mo speed.
Well, YouTube, you can do that actually. You can bring it down. You can give me like a remote taser if I'm talking too fast, just buzz me or something.
I'm just, at this point, I'm so used to talking to you and hearing how you speak. I'm just like, Oh, this is, and I know, see, when you get really excited because then it's at like, it's like 5X.
One of our members of Geo was like, "Hey, we love the podcast. Can you tell Maj talk a little slower, please? I can hear Bobby fantastic. I can hear Bobby great. Maj talking too fast." I'm like, all right, we'll do that.
Oh, that's funny.
Write you a script and you can read it.
Yeah, right. Hey, did you watch the game last?
Just make sure you do that. I'm not offended if you do. So.
All right, fine. All right. Well, you talk too fast this time. We gotta re-record the whole friggin' thing. But now you're fine, man. This one was good. You actually, you know what? I honestly, I was really just happy that you didn't pound the desk.
I wanted to.
Oh, did you? Oh, you would have killed me. You would have killed me if you pounded that. Actually, I think your listeners, they're gonna be like, I can hear Bob great. Maj is great info. You speak, you're speaking a little fast, and we keep hearing this. What the hell is that? Is someone knocking at the door literally the entire time? Like, is someone coming for him? This is insane. So, but hey, real quick, I have to congratulate you on your nice win last week. Freaking Giants suck.
Oh, that was beautiful.
We suck. I mean,
Saquon's
done. I know. Now Saquon's done. I mean, we weren't expected to be good this year anyway, but like.
Yeah, well. There was some weird games. I had a horrible my pool.
Yeah.
I was covering most of my games like the last till fourth quarter.
Did you have money on that Cowboys Atlanta game? Because that was ridiculous.
I did not, but I definitely I had Dallas win that game or covering, and I guess they.
Oh, you did? Well, what was? Oh, so they won,
they
but
cover.
I'm not good with the lines. I don't know what they mean. I never know. I really have no idea. I try to think like I understand it, but I don't. Give me a good parlay. I'll do parlays all day.
I had a good start.
I'll pick it based on a line.
I guess last Thursday was the first game of the week, and it was Cincinnati and Cleveland.
Yeah,
I think Cincinnati was underdog by 5.5.
Okay.
I took Cleveland to win the game. I mean, to win outright and easily. And of course, I'm at a bar. They're up by 12, 13 points. I got this. I wake up in the morning. They lost. It was 5.
It was 5.
It was 5. It was.
They didn't cover.
5.5. Yeah. Something like that. I don't know what it was, but I lost like a half a point or whatever in terms of. You gotta be kidding me. And the Steelers, I lost that bet because they had a handily covered the Steelers until the last quarter or whatever.
Yeah, that was another 5-pointer. What was it, 26-21?
Thick in the stocks.
Yeah, this friggin' sports betting, man. It's
rigged, like the option.
Just do parlays. Just do pick'ems. Just get the odds. Get the odds on 3 games that you're pretty confident because you pick the winners. You picked the winners just now.
I did this. Yeah. I had a good Super Bowl bet last year, a playoff bet.
Oh, okay.
I bet. I think it was Tennessee Ravens and I picked Tennessee to win outright that game.
Oh, that was a mistake.
Wait,
they won. I was.
They won. Yeah, I won I lost. I let it ride the whole time. I lost it. I got cocky. And I bet Houston. I thought the Texans would beat KC.
Yeah.
That was looking really good for 10 minutes, and I lost.
I want to know what was your thought process there? In what right world did you think the Texans were going to beat KC last year?
I just thought because you had Tennessee and Houston. You had Belichick, the Slables coaching the teams, that they'd find a way to do it. The KC one was stupid. Stupid. I shouldn't have done that. That was just stupid.
That was a bad bet. But
yeah.
All right. Well, anyway,
I should have taken the money and ran.
Hey, we should put money down right now on the Giants getting the number 1 pick. We're tanking for Trevor. Let's go. Let's get Trevor. I mean, Danny Dimes. It was fun, but let's just get it was fun. We'll trade him, get Trevor Lawrence in there. Let's do this right. That number when they took. Look, Danny Dimes has shown some nice things, but the fact that they took him that number 6 pick is still just what?
Yeah, that was a little absurd. I thought, yeah.
Yeah, whoever took the under on where Daniel Jones was going to be drafted in that pick, or like that. If I don't know what the average bet was, like maybe he was mid tier, like 15. If anybody made a bet, he's going to be taken earlier. Wow, I hope they put a lot of money on that. But anyways, anyway, we should do more sports talk. I like I love sports.
Yeah, you do.
Yeah, but you don't do baseball though, right? Do you follow baseball?
No.
Okay, but you do football, and then you don't do soccer. Do you do soccer?
No. Yeah, football. About a little basketball, but football's my thing.
Football? Okay, good. We'll do football. You know what? That's a new segment. We're gonna do football pick'ems every week. We should do like Bill Simmons and Cousin Sal. They do guess the lines. Let's do a guess the lines. I have to understand it first, but then we'll do them.
That's fine. You probably do better not understanding them.
Yeah, right. All right, dude. Well, this has been fun. Where can everybody go and follow you on social media?
You can follow me at Maj GeoInvesting on my personal Twitter, at GeoInvesting on my company's Twitter. You can come to geoinvesting.com and take a free trial there and email me at maj@geoinvesting.com.
Awesome. What about your phone number? You always give your phone number.
267-246-3263. The over-under on that is 1.5. I have gotten one call.
There we go. All right. It's getting out there. Look, it took what are we? Episode 8, 7? I don't know. 7, 8 episodes. There we go. We got a call. It's beautiful.
We'll find some MicroCap guys out there.
Yeah, that's for sure. All right. Well, you can follow me on Twitter at Bobby K Kraft, BOBBYKKRAFT. You can listen to the audio version of this anywhere that you get podcasts, but the website is avoidingthecrowd.podbean.com. And you can watch the video version of this. You probably are if you're watching this, you know where to go. But if you're listening to the audio version, you can go to youtube.com/SNNWire to see us in person. Yuck it up. Well, with that, Maj, I will see you in a few of these investor meetings on Friday.
Yeah, see you there, man.
All right, dude. I'll talk to you later. This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.